First, I'll just explain again a few points and then we can read through the PPT. So basically, risk management is the process of identifying, assessing, and controlling threats to an organization's uh, processes, systems, people. So if you remember yesterday, I mentioned that three things are very critical in an organization. It's the people, process, and technology. So whenever we are trying to do any risk management for the company, we need to encompass through all these things. People, we need to make sure that our people are well aware of the risks. They are not clicking any random links. They are not giving access to anyone through whatever privileges they have. Process, we need to make sure that our processes are in place. Everything is defined, has a SOP, a proper procedure is followed, approvals are taken. And then comes the technology part where we make sure that we have the right configurations, we are using the right set of applications, right set of infrastructure to support our security posture. So that's about management. You can think of it as the brakes. I mean, on a in a car, they aren't there to stop you from driving. They are there to so you can go fast but safely. So that's what basically risk is. That you can, uh, yeah. I hope you got the context. So
Yes.
risk management helps organizations identify, analyze, evaluate, and mitigate potential risk. It ensures business continuity, regulatory compliance, and operational efficiency. So, do you understand business continuity?
Yes, I do.
Okay. If you don't mind, can you just uh, explain what you understand from this?
I understand that is the continuation of the business and it comes in different forms.
Hmm.
Um,
Continuation in what context? I mean, is it the daily day-to-day operations or what exactly?
from my understanding, it's the operations continuing no matter the circumstance.
Right. Yeah. So whenever we say that our business is continuous and available, we what we are essentially saying is that irrespective of the circumstance, we don't care whether there's a war in America or in Iran, there's an earthquake somewhere, our businesses will continue to provide the service. So that's what
Mhm.
business continuity is all about. And risk risk is the risk is the vehicle, the tool that is enabling the business continuity. Okay, and once you have implemented a very mature risk framework, obviously you are going to cover a lot of regulatory compliance and operational, and you are going to achieve operational efficiency. So that's how these three things are connected. So let's say if tomorrow, if someone asks you what exactly is risk management, you just mentioned that this is the process of identifying, assessing, and controlling threats to an organization. And then it ensures the business continuity, regulatory compliance, and which ultimately affects the operational efficiency of the company. So this is basically about risk. Okay. Now
Okay.
coming to the key steps. So it's not a one-time event. Risk management, it's not like that you did something a year back and now you are relaxed for a year. Risk professionals don't work like that. We need to be on our toes every day. Uh, just a second. Yeah. So we follow generally, I mean, whatever steps that you see here, this is mostly which NIST also promotes. I think you are aware of NIST. You mentioned yesterday, NIST. Uh, and this is based out of ISO 31000 as well. So risk management is basically driven from NIST and ISO 31000. And just to mention, you can read the steps here. So risk identity, I'll go for each step, I'll go in much detail. Monitoring, we
Mhm.
already covered yesterday, but these four I'm going to cover in detail. So risk identification, basically what could go wrong, right? Uh, you need to understand and detect potential risks. Uh, it's not that something has happened, but what could go wrong. Uh, that's how you look at it. Now, risk analysis: how likely is it, and how bad would it be? So this is where you assess the likelihood and the impact. With me?
Yes.
Okay. Then comes the evaluation part. So here you say that, is this risk acceptable? What, I mean, how do you prioritize this particular risk based on the severity? So once you have identified what could go wrong, you did the analysis of what impact it can have and what's the likelihood of it happening. And then you come to the evaluation part where you decide or conclude that, okay, this is the severity of the risk. Probably it can damage, it can have reputational loss, financial loss, whatever. I mean, my customers could get affected, my company can go down for a month or something. So, uh, you have now evaluated it, and then comes the treatment. So what are we going to do about it, basically? And here, this is the step where we implement mitigation strategies. I'll come to that. There are uh, four types of risk treatment types. I'll come to that later in the slide. But so this is basically what are we going to do about it once you have evaluated that something could be of a very severe risk for the company. How are you going to mitigate that? Okay. And then comes
Mm-hmm.
the part where you monitor. So is there, like I mentioned yesterday also, monitoring is to make sure that whatever you have done, whatever you have implemented, whichever controls you have put in place, any policies that you have made, you make sure that those are working right throughout the period. It's not like you have implemented something and you forget about it. You need to continuously monitor whatever control you have implemented in your organization.
Yes.
Okay. Uh, any questions on this?
No. But I think I have an idea of what the mitigation strategies are gonna be. Is transfer one of them?
Yeah, right,
Transfer, accept. Oh
right.
yeah, yeah, okay.
Okay. We'll come to that. Okay.
Okay.
So now, what is risk identification? So basically, this is the process of finding and documenting the who, what, where, when, and why of a potential threat. So we call it the five W's: who, what, where, when, and why of a potential threat. So this is the first step in risk management. Okay. And it focuses on detecting potential risks that could impact objectives, and objectives are definitely the business objectives. Sources of risk could be internal, external. Internal risks could be your process failures, human errors, system vulnerabilities. Anything that is not patched could become a system vulnerability. Process failure is like something we discussed yesterday, that uh, anyone joining new and should have a manager's approval before getting access to production, but the process is not actually being implemented thoroughly. So that's a process failure where people can have access. And human error is again social engineering, right? Uh,
Mm-hmm.
that's why we have multiple security trainings throughout the year in a company. So whenever you'll join any company, you'll need to go through mandatory security trainings. Now we have AI trainings and all. This is just to make sure that you are doing the right thing. You're not clicking on random links, you're not replying, you're not sharing company's critical data here and there. You are not putting customer data in whatever AI platform you are using. So uh, that's pretty much about it. Now coming to external, so cyber attacks, you must be aware, right? Uh, uh, Last year in August, I don't know whether you heard or not, but uh, do you know the company Jaguar Land Rover?
Yes.
Okay, so a plant in UK, it got hit with a cyber attack in last year August. You can check it up on the internet. And Jaguar Land Rover was shut for 2 months There was no production of cars. All employees were at home. So you understand the severity. And I was just looking into it, and I got to know that Jaguar Land Rover contributes around 1 or 2% of the entire UK's GDP. So you imagine a company that contributes to the GDP of a country and that is shut
Mm-hmm.
for 2 months because of a cyber attack. It's disastrous. Okay.
Mm-hmm.
So that's why external factors are very important. You have to be right every time, but the adversary has to be right just once, and you will be done. So that's why cyber attacks are very critical. Regulatory changes, again, something that you are doing today and tomorrow, the process changes, the regulatory requirements changes. Let's say, for example, before COVID happened, uh, very few offices, uh, very few offices were giving work from home privileges to the employees. Okay, but once COVID was there, and then everyone was working from their own home on their own personal Wi-Fi network and everything. Then that's how the that was an external risk, right? So regulatory changes happened, companies made new policies. They integrated VPNs into the systems. They made sure that their network access is very strong. The firewalls are now sitting at the end user's desktop as well, rather than on a particular system. So that's what the regulatory changes are. And then comes the natural disasters, like I mean, man-made, natural, whatever you call it. So let's say if you would have heard a few weeks back, Amazon center in Dubai got hit with a missile. There was complete outage for that for the objects in those particular S3 buckets in in AWS. So that's an external factor. Okay.
Yes.
Okay. And then risk categories could be operational, financial, compliance, strategic, and technological. So this is pretty basic. Uh,
Mm-hmm.
I'll move ahead. So, what could be the risk identification methods? So first is brainstorming, which involves experts discussing potential risks. This is what we generally do uh, in a product company. We brainstorm looking at the current scenario, the current processes, the current systems, the underlying infrastructure, the environment, the different configurations. For example, if we are storing all our data in a S3 bucket, we make sure that what could be the risk, right? I mean, if something happens to this particular data center, what would be my risk? If my all data is gone, what would I do? So that's where we brainstorm. Second is checklist-based risk assessment, where uses predefined risk list from the industry standard. This is pretty basic. Uh, Whatever industry you are going to work for example, if you are in automobile, you can just Google a checklist, or you can follow NIST, you can follow ICE 37 31,000, 27,001, just to make sure that you are covering all the risks that are there, and then minimizing the impact of that. Now comes the interviews and surveys. So gather inputs from stakeholders. This is something that we also do because we need to work with the engineers sometimes. They are the ones who are writing codes, building the product. So we need to understand the nitty-gritties of the product through them. So are you aware of the CI/CD pipeline? Have you heard it before?
Yes. Constant integration.
Constant
Um,
deployment. Yeah.
yes.
So so CI/CD pipeline is built by the engineers. Okay, those are the developers and coders. We interview them. We ask their inputs of where do you see someone can exploit this, or basis my knowledge, I feel that someone can exploit your code here. So then they give me an answer. I evaluate the risk. What's the likelihood? What could be the impact? And that's how. So you understand, right? What you are doing here. So as a security professional, doesn't matter which job you land onto. Okay, you need to understand the risk aspect of it. In security, everything is related to risk. Okay. Now, coming to SWOT analysis, this is basically the strength, weakness, opportunities, and threats. We do have SWOT models as well, but this is something that we prepare when asked very specifically that do a SWOT analysis for this particular product's risk, and then only we do it. Otherwise, this is just something that's there, but not everyone does it. Now, historical data analysis reviews past incidents and risk trends. So, whenever you are doing any risk assessment, you also need to look at what past incidents have occurred in your company. So, anything that was vulnerable previously, have you fixed that or not? Have you bridged that gap or not? Any potential risk that was identified maybe during my uh, last risk assessment or during analysis or whatever, have you patched that gap or not? So this is very important. You look at historical data all the time. Even in audits, like I mentioned yesterday, whenever you are going for current year's audit, the auditor would come and see your previous year audit report as well, just to see that uh, if you remember, there was one point in yesterday's slide for follow-ups. Uh, do you remember?
Yes.
Yeah, so follow-up was for whenever an audit happens, and that's why the auditors always follow up with us that, hey, we found this, we found this exception in your system. The system is not working fine, but have you patched it now? Have you remediated the effect? Have you found the root cause and fixed the issue? So that's why past incidents and risk trends are very important. Uh, Now, coming to process mapping, so identifies risks in workflows and IT systems. So this is pretty basic. Uh, this is what we generally do while making policies. So because the policies are made as per the processes, and that's what this particular point is that you identify risks in the workflow. So let's say taking yesterday's example itself that while I was preparing the access provisioning policy, I noted that there were no approvals required. So that's when I identified a risk and I implemented a control then and there that a manager's approval would be required for access provisioning. So uh, that's how process mapping works. Any questions related to risk identification?
No.
Okay, moving ahead. So now coming to risk analysis. So basically, this is determining the magnitude of the risk. We look at probability, which is the likelihood, versus the impact, which is the severity. Okay. So if anyone asks you what is the risk here, you either say it's high, medium, low, critical, or you talk in numbers. Okay. So that's your analysis part. So evaluates the likelihood and impact of the identified risk. Let's say, for example, uh, just to give you uh, something to uh, think about, let's say if whatever data you are storing in AWS that is not encrypted, uh, what do you think would be the risk in terms of high, medium, low,
Hi.
and why?
It's not encrypted.
That's fine, but that's the problem, right? But how are you concluding that the risk is high?
Um, oh, because the consequences could be severe.
Right. And how do you decide on the consequences?
Um,
So you look at the likelihood and the impact.
oh, yes.
Okay. Yeah. When you say that it could have severe consequences, how are you deciding that? You cannot just blindly say that statement, right? You need to make me understand or anyone, if you are mentioning, let's say, if you are telling this to your manager or even the senior executives, that The risk is very high here. The natural question anyone would ask is how, why. So that's where you explain to them the likelihood and the impact concept. You will tell them that in today's world, having your data unencrypted is like you are inviting adversaries for trouble. So likelihood is very high. I mean, everyone wants your data. For example, if I'm working today in Cisco, I know that many of the competitors, many of the adversaries that want to exploit the data, I mean, the likelihood is like every every adversary on earth would want the data. And what could be the impact? Impact is very bad. I mean, we could lose customers, we can face fines, reputational risk, everything. So, uh, very high severity, I would say, if encryption is not there. Okay, so that's how you explain someone. If someone asks you how did you did this risk analysis? Why are you saying that you should? So let's say tomorrow, if you are into SAP GRC compliance, and someone asks you, and you suggest you probably you identified a potential gap in the process. You suggested someone that we should implement a particular control here. Natural question would come why? Okay, that's where you need to explain them this particular concept that I identified this risk, I did the analysis, and this is my evaluation. This is the severity that I think it is, and this is my treatment plan where I'm trying to mitigate the risk by implementing this particular control. Now you get the context, right?
Yes.
Okay. So there are two approaches for risk analysis. One is the qualitative analysis, the other is the quantitative. Uh, the it itself is self-explanatory. Qualitative is where you use subjective judgment, high, medium, low. Quantitative is where you use numerical data. So either in terms of money, in percentages, or uh, or a risk rating. So that's how you do a quantitative analysis. Any questions so far?
No.
Okay. Now, qualitative risk assessment. So this is basically using a scale like low, medium, high. Great. This is great for quick decisions. Okay. Let's say if you don't have much time and you need to give them a risk scorecard or a risk assessment needs to be done, you generally stick to qualitative because this is mostly on your subjective judgment. It doesn't require data that much, but you should have a logic behind whatever scorecard you are preparing. So, subjective approach to evaluating risk based on expert judgment. Now, again, expert judgment comes with experience. Once you have entered this field, you'll work here for 2 3 years probably. Then uh, you can identify or at least judge the risk. So although, for example, some uh, most of the things are common sense here, but yeah, expert judgment counts. Risks are categorized as low, medium, high based on likelihood and impact. So likelihood and impact is very important. I mean, you should, whenever someone calls the word risk, just imagine likelihood and impact, and you'll be good. Okay. Now, uses methods like risk matrix, heat maps. I'll show you that in the next session. It's pretty basic, nothing fancy, but heat maps is something that we use sometimes to showcase, let's say, something that is in red would be a very critical, a green would be low risk, etc. That sort of scenario analysis is uh, where you analyze scenarios different, let's say what could go wrong, right? If this happens, this would be the risk. If this happens, this would be the risk. So that's how you do scenario analysis. Now coming to the Delphi technique, this is where you mostly anonymous expert polling. So uh, it's like that expert consensus. What you do here is let's say you are not aware, like I mentioned, when we work with the engineers, they have created a new product. I'm not sure of what this particular GitLab code can do. That's where I'll apply the Delphi method. I'll have expert consensus. I'll ask different developers the same question, that how do you think this particular code can be exploited? Do you see any vulnerabilities in this particular code? And that's how I'll base my judgment. Let's say if I ask 10 people and out of 10, 8 say that this code can be exploited, I'll keep the likelihood as high. Okay, so this is the Delphi method.
Yes.
Uh, with me? Okay.
Mm-hmm.
Yeah. And qualitative is suitable for organizations without historical data or complex risk calculations. Although in today's world, every organization has a lot of data, still they prefer qualitative because this is easier. Quantitative is difficult because you need to, I mean, justify. Whenever you are throwing numbers, you need to justify a lot. So that's why teams, risk teams, and organizations, they want to stick to qualitative more. Now, looking at the risk matrix, I'll show this. I'll show you a separate risk matrix in next session. That's an actual risk register slash risk matrix, whatever you want to call it. But so whenever I mean impact and likelihood, like I mentioned, so low impact, which means that the risk is low. Basically you need to whenever you have medium likelihood and low impact, you have low risk. Okay, you have high likelihood and low impact, that means medium risk.
Mm-hmm.
Okay, low likelihood, medium impact, low risk. Medium likelihood, medium impact, medium risk. High likelihood, medium impact, high risk. You got the context, right? So let's
Mm-hmm.
say when I'm looking at high likelihood and high impact, it would be critical risk. Okay.
Mm-hmm.
So that's how you jump to conclusions on whether something is a high, medium, low, severe, whatever. Okay. Moving ahead. Now coming to quantitative risk assessment. Like I already mentioned, uh, less followed today, but is important to know at least. So this uses numerical values to assess risk and potential financial losses. Common metrics that are used are like annualized loss expectancy. So this is pretty common. Uh, how do you calculate it? It's single loss expectancy into annual rate of occurrence. Okay, so let's say I'll give you an example. For example, if you can come up with a data which says that a data breach has a 10% chance of happening and will cost around, let's say, $1 million to the company. So the annual loss expectancy would come to $100,000, 10% of 1 million. Okay.
Mm-hmm.
So the expectancy of loss is 1 million and the rate of occurrence is like 10%. There's a 10% chance that something can happen. Okay.
Mm-hmm.
How did you decide the single loss expectancy? It's your asset value into the exposure factor. So exposure factor is something that companies decide on their own. It's as per every company, but asset value, I mean, it all depends what data are you storing there, what is the asset type. So let's say for NVIDIA, its chips would be the highest asset it has, right? That's what they are selling. So uh, that's how they will come to this particular calculation. And rate of occurrence, like I mentioned, it's a 10% chance of happening. So estimated frequency of risk occurrence. So let's say in a year, if there are chances that my S3 server can outage for 36 days in a year, that would roughly turn to around 10% of the entire year. So that's my frequency. Okay.
Mm-hmm.
Okay. Moving ahead. Uh, So this is suitable for organizations with historical data and financial risk quantification needs. Okay. Now, just to give you an example, a bank assesses risk related to online banking fraud. Threats could be phishing. You know phishing, right?
Yes.
Okay. Unauthorized transactions, data breaches. When you look at qualitative approach, risk matrix to rank threats, which high risk for phishing because uh, the likelihood is very high. Anyone can click that particular link, and the impact again could be very high. Someone can get access to your system. Okay.
Mm-hmm.
Now, same thing with quantitative approach, financial impact. You just mentioned that this could be the financial impact of the of a particular bank fraud. So you are now quantifying it. Now mitigating, how are you going to mitigate that? So you, because bank assesses risk related to online banking fraud, unauthorized transactions, phishing, data breaches, you are going to implement multi-factor authentication, which makes sure that no one outside the approved or authorized list of users have access to the system. They cannot do anything. And then fraud detection AI systems that any unusual transaction, any unusual amount would be flagged and it needs to have. So generally what I have seen in banks is, let's say if you want to transfer something, uh, there are three, four categories that are decided. So let's say if you want to transfer $10,000, probably it won't go through any approval. But if when you come to $50,000, there's some approval. And likewise, if you are transferring $1 million to someone and you have never done that before, definitely it will go through a few checks before your money gets transferred. So uh, that's the new model they are following now. Should I move ahead?
Yes, please.
Okay. Now, what is risk evaluation? So, this is basically comparing the results of the analysis against the company's risk appetite. So, how much risk are you willing to take as a company? Okay, so that's where your evaluation comes into picture. Uh, this is compares analyzed risk against risk tolerance level. So, risk tolerance is basically my risk appetite. Okay. Now,
Mm-hmm.
determines which risks need immediate action and which are acceptable. We are going to cover that in the risk treatment section. This uses frameworks like NIST. I already mentioned at the very start, NIST, ISO, COSO we discussed yesterday, if you remember, uh,
Mm-hmm.
and COSO for evaluation. So, uh, this entire risk management, it uses these three frameworks very rigorously and uh, follows on the same path. So that's about it. Now helps in decision making for risk acceptance, mitigation, transfer, or avoidance. Okay. So
Mm-hmm.
just to give you give you an example here. So let's say a fintech startup finds a bug that allows users to see their history uh, because it's a fintech company and it is allowing users to see their uh, see others data. I mean another user's history of logs or whatever. So then for this particular if you this is a pretty complex one because let's say if you are doing the evaluation you need to identify the likelihood impact and everything, but let's say if you are working in Europe and if you are able to share that data with someone else, if you are looking at someone else's data, the risk is high because it violates GDPR. We discussed about GDPR yesterday, right? That Europeans data cannot leave European servers. But if you are replicating that particular, because there are many fintech companies based out of UK, what if I am sitting in India and I import that data from UK to India? It would be a very high risk for the company because it violates GDPR. In what terms it would be high risk? Because the impact would be high. If you remember yesterday, I mentioned that it the penalty could be 4% of your global revenue, right? Impact could be severe. So That's how I'll just label it as high risk. Now, coming to risk evaluation process, how are you going to evaluate the particular risk? It is basically prioritize risk, rank risk based on impact and likelihood. So, let's say you have identified 10 risks in an application or in a product. Now, you are going to prioritize that. It's not like you'll put them in a report randomly. You need to prioritize everything. I mean, the highest risk would come at the top and the lowest risk would go at the bottom. So that's how it is. You'll assess the risk appetite of the company aligned with business risk and tolerance. So let's say if, um, for example, if I am a small company and all my data is hosted on a AWS server in India, and you come as a compliance specialist and you suggest that, hey Harsh, why don't you make a replica of your data in the US as well? It will give you more stability. I mean, if something bad happens in India, at least you'll have your data safe in the US, right? But I tell you that because I am a small company, I do not have that much of manpower, that much of resources, and the financial ability. I'm good with my data in India, and I don't have such a huge customer base that I need to keep one more replica in the US because it is going to cost me a lot. So that's where I'm aligning my risk with my business risk tolerance. Okay, it's not like I need to work on every risk that is there, because otherwise there is no company that is perfect. Okay, there are always risks in a company which the management kind of accepts or transfers. So uh, that's about it. Uh, Compare risks with business objectives. Again, uh, almost the same point, that you need to have an understanding of what business objectives you have. Let's say if I'm selling watches in India and you tell me that, hey, why don't you have this and that? Why don't you have a complex mechanism for that? I'll tell that it's okay. I mean, IT is not my business. I'm just making watches. My objective is to make more good watches to sell in the market. Risks related to IT are not my primary concern. So that's where business objectives comes into picture. And now define response strategy, which you choose from a risk treatment option. Any questions on this?
No.
Okay. Now coming to risk treatment, the process of mitigating. So basically choosing a strategy to handle the risk. How now you have identified, you have analyzed, and you have evaluated your risk. Now you decide on what you are going to do. How are you going to handle that particular risk? So this is the process. Sorry, uh,
Mm-hmm.
did you see anything? No.
No, 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 no.
Okay. Yeah. So this is the process of mitigating or responding to identified risk. Four main treatment strategies is risk avoidance, risk mitigation, which is basically uh, your how are you going to treat that particular risk, risk transfer, and risk acceptance. So avoidance is basically stop the activity. I mean, if let's say eliminating activities that cause risk. For example, if I know that uh, keeping my data in Iran could be dangerous, I'm going to stop that. I'll not do that. If I know that unencrypted data is going to impact me very severely, I'm not going to do that. I'm going to eliminate that particular activity, and I'm going to implement a new control that, okay, you need to have encryption everywhere, end-to-end encryption. You need to have encryption in transit, you need to have encryption at rest. Okay, so that would be my avoidance. Uh, Next is
Mm-hmm.
risk mitigation. So mitigation is where you add controls. For example, you decided to implement a firewall. You are kind of filtering out or at least restricting the traffic, the ingress and the outgress traffic. You are closing a few important ports. You are making sure that that's how you are implementing controls to reduce the impact. So, for example, uh, whenever an employee leaves, his ID needs to be disabled, right? If I'm in Cisco, if I leave Cisco tomorrow, and if I'm still able to access the system using my login ID and everything, I can do anything, right? I'm not an employee anymore. Why should I have access? So that's where controls are implemented that anyone who leaves the company, his ID should be disabled, let's say in a day. Okay, that's where you are implementing a control to reduce the risk impact. Make sense?
Yes.
Okay. Now comes risk transfer. So this is when you're shifting the risk responsibility, which is mostly insurance, outsourcing, etc. So earlier, I don't know uh, which generation you belong to, but let's say earlier, all companies used to have on-prem servers. Okay, you must have heard the term on-prem, on-premise. Uh, so now they transferred that risk to AWS. They said that okay, we are not going to have anything on our premise. Let's just
Mm.
export all our data to AWS. Let's transfer the risk to AWS. It's a more mature company. It has many checks. It is storing data of maybe 1 lakh other companies. So I can trust AWS with my data. It is going to have basic safeguards, and probably I can just pay an amount on a monthly basis or a yearly basis, which is actually lesser than maintaining the on-premise server that I have. So that's how you transfer the risk. And to be honest, every company has an insurance policy, a cyber insurance separately, and then a general insurance which covers natural risks and everything. So this is pretty basic for every company. Okay.
Mm-hmm.
Now comes the part is where you accept the risk, so do nothing because the cost of fixing it is higher than the risk itself. Uh, okay, there are times when something that we identify, let's say, uh, we tell the team that a data restoration test of the production environment has not been done. They tell us that it's very expensive to do a restoration of my production environment. I cannot do that. I can do it on the test environment, but a replica of my live environment would have consequences. I mean, my live servers could go down, my customers won't be able to log into the system, use the service, etc., etc. I'm not going to do that. So that's where they are accepting that particular risk that it's okay. I mean, the cost of fixing it is higher than the risk itself. Now, steps for implementing risk treatment. So, select mitigating controls, choose controls based on risk evaluation, develop action plans, assign responsibilities and timelines. This is very important. Okay. So, whenever you find any exception or any risk, what you need to do is you need to assign the responsibilities. It's not like someone is not accountable for it. You need to make someone accountable for that particular risk, and you need to have timelines. It cannot be like you assign something to me and I'll tell you, yeah, yeah, it will be done. You need to ask the question by when. Okay, so whenever
Mm-hmm.
we identify any risk, we approach the team, we talk to them, we have multiple meetings where we make them understand of the risk, the potential implications it could have, and we ask them who is going to take responsible within your team. I mean, if the entire team is responsible, well and good, but at least I should have a primary point of contact, right? So who is going to be accountable? Who am I going to assign this particular responsibility within your team? They give me a name, and then my next question is, what's the timeline? Do you think when we are going to remediate this particular risk? So depending on the complexity of the problem, a timeline is also decided. Now, implementing controls. I've already discussed this in the previous session. Controls are very important. If you remember, I mentioned TOD, TOE. Okay. First, you need
Mm-hmm.
to have a test of design where you design policies, you design processes, and then you implement them, which is your test of effectiveness. Okay, how good you have implemented them, whether the control is working as intended or not. So you deploy security tools, for example. But first, you write a policy that or a process document that the company has decided to deploy security tools which will do vulnerability scanning on a daily basis. Reports are going to be generated. If any alert is created, that alert is going to be triaged to that particular team, and then you deploy that security tool into your system, and then you see that whether it is working as documented in the policy and as per your expectations or not, whether it is sharing the alerts with the respective team or not whenever an alert is there, whether it is sharing a report of the complete vulnerability scan every day or not. So that's how you are going to make sure that the implemented control is working right. Okay.
Mm-hmm.
Monitor effectiveness is track risk mitigation performance. Like I mentioned, once you have the timeline, you also need to track with the team. If they tell me that, hey, Harsh, we are going to take because we are very loaded with so many product releases and everything, we might take 6 more months to fix this particular gap. I'll say it's fine. Why don't you do it in 4? If they have a very solid reason, probably I'll buy their uh, timeline. I'll say that it's okay. Take 6 months, but it's not like I'll come to them after 6 months. I will keep a track of that particular risk. I will reach out to them every 2 months, maybe. And when we are near to completion, I'm going to reach out maybe more often every month that, hey, what's the progress? Are you working on this or not? Have you made progress or not? So that's where you track the risk mitigation performance. And then continuous improvement is adjust strategies based on new risks. So every day there are new risks identified. I see in my company itself, I mean, every day something or the other is there, some new product, some new feature, some new environment, some new tool. And that's where continuous improvement and I mean, with anything new comes new risks. You need to validate those. Let's say every company is now shifting to AI now, but currently no one is talking about the risks in AI. But someday, definitely within a year, people are going to talk about risks in AI. Currently, it's just a very vague discussion. We do not have any checklists, or at least companies are not that vigilant about it. I don't know whether you have heard about ISO 42001. Have you heard about it?
Mm-mm.
Okay, so that's a new certification by ISO. I'm planning to do it this year. So
Okay.
ISO 42001 is AI security checklist. If you are certified in ISO 42001, you can tell in your interviews that, hey, I am a certified professional in AI security.
Mm.
Whatever checks that are there related to AI systems, I know them. You can just tell them. So keep a note, make a note, 42001, something that you can
Mm.
read upon and maybe do it later. Moving ahead, uh, so example of security risk management, a financial. Okay, I guess. Uh, so let's just go through it. Financial
Mm.
firm faces cyber threats like phishing, data breaches. Risk identification is you assess the threats from phishing and unauthorized access. You did the analysis, evaluate the impact on data, financial loss, etc. You did the evaluation, prioritize the risk threats. For example, uh, lack of encryption, and then you suggested risk treatment plans. Okay.
Mm-hmm.
Now, best practices in risk management. So basically use a combination. So see, I'll just before we come to the slides, two, three things that are coming to my mind. So generally, what I preach is culture over compliance. Don't just tick boxes. Encourage the people working in the organization to report near misses without any hesitations. Okay, so let's say even if I get a suspective mail, it's not like I know that, oh, I can delete it, but I share it with my phishing team just because they are aware that someone in the company has got this particular mail, and probably there are other employees who have also got this mail. I don't know who could be the problem, but there are chances that, let's say, in a company of where you have 50,000 employees, someone could click that particular link. So that's where you need to report everything, and that's a culture that is kind of you should have. Okay. Now, another aspect is continuous monitoring because risk isn't static. A low risk today can become a critical risk tomorrow. So that's where continuously monitoring everything is very important. Now, best practices are combination of qualitative, quantitative analysis, follow industry frameworks like NIST, ISO 27001. Have you heard about 27001?
Yes, I've heard about that one.
Okay, so this is ISMS standard, Information
Mm,
Security Management System. Uh, I have this certification. I have a lead implementer certification for ISO
mm,
27001, which means that in any new company, I can tell them that if you are not ISO 27001 certified, since I have a lead implementer certification, I can help you achieve this particular certification. I can
mm,
help you with the audits. I can help you in implementing the process end to end. So this is also a very good certification. There are two versions of this. One is the lead auditor, the other is lead implementer. I have the lead implementer one, but lead auditor is equally good. So
mm.
again, a certification that you can just note down and for the future.
Which
If
year
if
did
you
you get it?
I did this in 2020.
Okay.
Yeah, long time back. Implement automation and AI-based risk monitoring tools. So this is something that every company now is doing. Whatever endpoint detections they have, everything is AI based. I mean, all my monitoring tools in Cisco are AI based. I just
Mm,
tell them a few prompts and it gives me the entire insight of whatever data it has found, it can find. So uh, the tools have become very advanced these days, and that's why less humans are required. So earlier, for example, it used to be a team of 20 people who would look at the risk, what's the monitoring tool status, what reports it is generating. Now it's just two people. They get the report, they get the insight, they get the remediation steps and everything. So yeah, I do see AI taking a few jobs here and there. Now, ensure cross-functional collaboration between IT security and business teams. So this is very important. Like I mentioned, we always work with the engineers. We always work with the access management teams. We work with the firewall teams. We make sure that since we are this, you can say the security guards of the company, we need to make sure that all other people are doing the right thing. So that's where cross-functional collaboration is very important. And now, regularly update risk assessments to address emerging threats. This is very important. Like I
mm-hmm,
mentioned, before COVID, no one thought that anyone would be working. I mean, there were a few companies, but mostly companies were calling people to office, right? You would connect to your office network and uh, then probably access whatever you have. But during COVID, everyone was working from home. Threats, there was a new threat that if you are working from your own system, someone can hack your Wi-Fi and it will have access to whatever you are seeing in your laptop, right? The threat emerged. For example, today with AI, I see a lot of risks emerging. I mean, uh, there, since for example the entire CI/CD pipeline in Cisco is now managed by AI. For
Mm-hmm.
example, if tomorrow somehow AI deletes a pipeline, I mean, obviously it can do that. It is not like it is not happening. I have read at a few places that AI somehow, without anyone's approval or permission, deleted the entire pipeline. Now the coders are banging their head on a wall to make sure, to I mean to fix that particular issue. So that's why we need to address the risk. We need to evaluate the risk. For example, if I'm given a chance to do a very thorough AI analysis in my company, AI risk analysis, I would definitely, wherever AI is implemented, I would still definitely very strongly propose a human in the loop. I mean, someone should be approving the actions of what AI is carrying out. There should not be unrestricted approvals for AI, right? Because if humans have a very restricted process of doing anything, why should AI do things on its own, right? So it's an emerging threat. So that's why you need to and if you look at any company's risk register, there are always new risks added every year. So that's something that's already in process. It's just that some companies are a bit, uh, I would say, uh, less care, more carefree. So yeah.